Good morning. Good morning, guys. How are you doing? All right. So let's um let's start. So today is Friday, guys. We have no news for US dollar. So the session can be clean or rangy. One of two things. Now let's begin with the weekly time frame. Obviously, I was, as I was mentioning that price did close back inside the range. We have a weekly buy side here. This is a weekly buy side. Now we also have a uh, previous week high, and as you can see, price is pushing towards that liquidity. Now daily time frame, as you can see that price already did sweep the sells buy side liquidity here, which was the CRT from range low to range high. Price did hit that, so I think that price can continue pushing to the upside a little bit more to sweep the liquidity, and then most likely look for sells. All right, so on the 4-hour time frame, you can see that price is pushing to the upside. Now I want to see how the next candle will open, but today most likely I would love to see sells, but the only thing that for me to take sells, I need for price to switch gears to bearish. Now price is bullish in a bullish trend, so at this point I will have to wait for price to show me willingness to go down, because we're trading above the previous daily high, pushing into the buy side liquidity. So we did sweep the buy side liquidity right here. Right at this point, this was a buy side liquidity. So right now, I want to see how price what price does. Either it will push to the previous week high, or you know where or I want to see something on the 15-minute to start switching to the downside. So to be honest, guys, I would love to see sells today. If anything, if price just continues pushing to the upside, then it's fine, because the 4-hour time frame looks it looks like price will wants to go to the previous week high, at least what I would love to see. Now what can we do is, maybe we can try to look for potential buys to this level, to the previous week high, and then look for sells, or just wait for potential sells and then just look for sells. So on the higher time frame, obviously, guys, we're pushing up. You may say we're bullish, and we are on the intraday. We're bullish, and we're pushing towards the buy side liquidity here, and then maybe we may even push to the weekly buy side liquidity, which is right here, and that would be the weekly CRT, would be weekly CRT, right? And on the daily time frame, you can see that price already finished the CRT by sweeping the buy side liquidity here, and now price is keep pushing to the upside, because on the weekly time frame we also have the CRT, right? So the only thing is that can we look for sells or buys today? So in my opinion, the sells looks much more better, but buys can happen as well to the upside. But we will see. We will see, guys, how price does set up. So we did sweep the Asian high, we did sweep the London high, so now New York is pushing higher. So I want to see if price can pull back from here, then push to the upside, and from either price will push down from here, or price will continue pushing to the upside and then look for sells from here. So, or if price does come back here, maybe we can look for buyback until this high here, and then potentially this previous week high. So yeah. So how was your day, guys? Everything good? Okay, one moment. Oh, all right. Good morning, AA. Good morning. What time is there? What do you mean by time? What time? I mean, it's now 9 a.m. If you ask me. Um, I just don't get your question. What time is it now? All right. So right now, what you know, whenever a new candle opens, if price does come down first, now we will have this. We will have this candle range. Now we have this candle range, and I want to see if price does pull back first, and then potentially look for potential buys. Because if price to go down, I think that price will sweep the highs once again prior to price to, go down. And if price at the open will go down first, then most likely we can try. I mean, I can try. I most likely will try buys. Okay, so right here you have the 50%. Now right here you have the fair value gap, which is here. Now, so I want to see if price can come lower and then look for potential buys to the upside, and that would be 1 to 2 risk to reward trade. Why? Because if price does go down first, then obviously I will look for buys. But if price just continues pushing to the upside, then obviously I most likely will look for sells. Yeah, it is New York time. It is 9 a.m. here. New York time. So the fact is that we have still buy side liquidity on the weekly time frame, on the daily time frame, makes me believe that we may come to these levels right here. So I want to see either we, push up first or we go down first. So that's very important. So so I would take buys from here, aiming to for price to go to the freshly made high, sweep that and eventually continue up for later sells. Now if price just continues pushing up, obviously then you can look for sells later on if you can get something that is for bearish, like, because on the 15 minute you can see that price is currently in a bearish in a bullish trend. So until price breaks lows and closes below this level, then it's hard to sell right now until price creates another swing high. So let's see. All right, so we are pushing to the upside. All right, so at this point, if price does close, um yeah, let's see how this 15-minute candle closes. So we'll have to wait and see how price does set up for 10 a.m. at this point, I think, because I want to see how this 1 hour setups, because if it does push to the upside, then obviously you can most likely look for sells. So let's mark up the 9 a.m. open. So this is the 9 a.m. open, and at this point I have to wait. So this will be a range high, range high, and this is going to be the range wall. And this is a 50% of the range. %50 of the range. So yep, let's see. So at this point, there is a, only, what price can do is price will come back, and from here we can see the push back up to this high. And if price does sweep and goes higher, then you can look for sells. Now, if price, comes down, then comes up, and then breaks, this low, then eventually you can look for sells. So that would be how I would approach the markets today. Because yes, we did sweep the range high, but we still have the some liquidity left to sweep right above here. I don't say that price has to come there, because on the daily time frame price already finished the CRT, right? You had the range candle on Tuesday, Wednesday manipulation, Thursday, Friday distribution. We did sweep buy side liquidity, so I want to see if we can go to the weekly high, right? And if price to go to the weekly high right here, then from here maybe you can look for sells. So that's why I want, I'm more or less bullish. Now if price does come back lower, then as I said, there is a potential probability to look for buys to the upside. Now if price just continues pushing to the upside, then as price does come to the previous weekly high, which is the buy side liquidity, then from there maybe you can look for potential sells. So it just depends what has come first. How do you choose the range candle on daily? Well, it has to be it has to be it has to be like thick candle. Like here you can see that this can be this is the range candle, this one as well, the thick one uh, right here. Most of the times you look at the candles which is thick, and you know looking at the previous weekly candle which is closed, we can see that price that closed back inside range means that price is most likely to go up. So where you look for, so right here, this is the range candle. Now price did sweep that, and then you go to the upside. So the basically candle, range candle has to be a thick one, and has to have a range like this, thick candle. So right here you can see, right here you can see, then right here you can see, I mean, right here as well. So if you want to know more about that, you can go on my on my channel. There is a CRT guide for like beginners. There is explanations about everything, like briefly, not in many details, but you will see what I mean. There is a good amount of information which you can use. All right, so price did not come to the order to the fair value gap. It So what I was looking for is long from here, but price did not touch it. So yeah, unfortunately, price did not touch the fair value gap on the 5 minutes, so I'm not in the trade. So the trade was from here with the stop loss below this candle and targeting the highs and eventually to target the previous week high. Now if price just continues pushing up, then it is what it is, and then maybe I can look for something to the downside later on. But at this point is it's kind of hard. Alright, there is nothing happening yet. Still waiting for this 1 hour candle closure. Want to see how price does set up for the 10 a.m. candle. All right, 1 a.m. 1 hour candle closes in 6 minutes. 4 hours still, does nothing. Daily is pushing up. Now, obviously, price does do respect this fair value gap on the 15-minute time frame, as you can see. So what I'm expecting for price is to go up, and what I was looking for, if price can get lower and be that would become the inversion fair value gap, and from here you could look for potential sells, but that's not the case. Price do respect this fair value gap, and now is still pushing up. So I think that price is still likely to take out this high. Let's see. Is like price heading to 365? Yeah, that could be the case, because that would be the previous weekly high, as I said. And for me to take sells, I need more information, guys. For me to take sells, I need more information. So on the 5 minute, you can see that price is in the range. Uh, so you can see that price is in the range from this level to this level. So we did take out highs, we did take out lows. So this is the range now, and price is still does nothing. So I don't want to get involved inside this area right now. So this is, I don't want to get involved here. So let's wait and see if there is any potential possibility to take a trade today. Remember, guys, today is Friday, and price already had its move up. So today was the day when we touched the daily CRT high, which means that the weekly liquidity target is hit, right? Because on the Tuesday, price did create the range, and now Wednesday, Thursday, Friday did the push to the upside, which means price is now already done the target, right? So expecting for price to do something else is, very, very hard, because today's Friday, last day of the week, so we want to see how this weekly candle closes. So, and you're expecting for prices to continue pushing up, even though price already pushed from the uh, price already have pushed like 400 pips. So so yeah, let's see. Now, if price will manage to close below here, below this fair value gap, right down here, at that point, you could expect for price, if price does close below here, we can expect for price to go, push up and then go to the range low and potentially hit the previous day high, which is here. Now, at that, obviously you would target first the sell side liquidity, and then eventually you will target the range low. So it just depends, right? Because if price just keeps, if price does do respect this fair value gap, then eventually price may continue pushing to the upside. So the current price action is a little bit messy, guys, a little bit messy, and I don't think I want to be, I don't want to get involved just yet. Guys, very important thing is that if you don't, if you don't know if you don't understand the price action, like, then you just don't trade, because whenever there is a trade, there will be clear, you will see it clearly, and at that point you will understand that this is your position, right? in most cases, like if you don't understand the price action at the current moment, that doesn't mean you don't know the price action. Maybe just there is nothing that you see and is valid for you, right? So this is very important thing, guys. Whenever you look at the charts and you're like, I don't understand what price is doing today, then you just don't trade it. Then you just don't trade a day, and that would be the best decision for you. Because, for example, right now, I don't see the trade for me just yet, so I'm not touching it, right? Not from the range high, nothing, because this is not clear yet. Even on the 5 minutes, if you would, if you are to enter the trade, right? If you are to enter the trade, like there is no PDA rate that you can enter from, right? There is nothing you can take trade from here. I mean, for me, guys, I don't know about you, but for me at least, there is nothing yet, just yet. So I have 1 more hour for my session, and that's how I overcome the over trading and over risking, is by just waiting for my setup. I know that I will risk most likely 0.5 or 1%, and I don't go above that, either 1% or 0.5. And what I mean by that is I'm not gonna risk my 1%, and like, for example, I risk 1% and my stop loss here, and I lose like 4%, right? I will calculate it, like I will take my 1%, I will take my pips. For example, my stop loss is like 60, 70 pips. I divide that into my entry, into 1%, and what I get, for example, so whenever price does hit my 70 pips stop loss, I will lose only 1%, if that makes sense. So yeah. And I know that I'm not gonna risk more than 1%, 0.5 or 1%, and then obviously I have my session window when I'm gonna trade, and that's how I overcome the over trading, which means that I risk 10% of my maximum loss limit. I risk 10% of my maximum loss limit. So, what do you mean by that? I risk 10%. Could you explain me a little bit more how I risk 10% of my maximum loss limit? So, what do you mean by that? Maximum loss limit. So you're talking about the you talk about the funded accounts, right? So for example, you have like 500 loss limit, so you will risk 10% of it, right? So you will only risk like $50, right? From the 50%, 500. Like if your loss limit is like 500, then your 10% is 50. So is that what do you mean? Or in funding account, if my maximum loss limit is 2000, I risk 200. So 200 you risk on so how you do this? So you calculate your 200 into the like stop loss, right? Yeah, that's fine, that's fine. All right, that's fine. I mean, I never heard of people doing that, so I just don't know how it works. Because if your maximum loss limit is 2000, then I mean, if that is your like 200, and from your account 200 is like 50% or like 1%, how is that counting from your account balance? Because if you have loss limit 2000, I assume you're a big funded trader, right? Because yeah, I just never heard of it, so I just don't know how is it. For me, it's like 1% is 1% from the balance, and that's it. I just don't overcomplicate things. Try not to, right? All right, guys. I really enjoying, like, we are getting more and more people watching. Like, this is very good, and I don't ask you guys to subscribe or leave a like because it's optional, up to you. But if you like, if you like being here, and you want me to continue doing it, so you can drop a like. You can subscribe if you're not subscribed. You can join my Telegram group. You can join my Instagram. And thank you very much, guys, for watching, because it means a lot for me, guys. All right, so we're keep respecting the fair value gap on the 15-minute time frame, and yeah, we're just ranging at this point. So 50K funded account wise, my 1% will be 500, but with my maximum loss limit 2000, average 200 with which is separate. Oh, if that makes sense. Yeah, yeah, that makes sense. So all right, 200 is like you basically risk half of your 1%. So that's basically the same thing, because your half percent is 250. So it's like yeah, it's same as I do, like 50% of my position or 1%. Like it's just you know if it a little bit more higher risk trade, I will risk like 50% of my position, because most likely the higher risk will be at the top, right? And then the 1% will be, for example, if I have, like, change in market structure shift, and then I can see the price coming into some PDR rate, and right here I will risk my 1% because I know that price already showed me that price wants to go down. Then I will can risk 1%. But for example, right now, right, whenever price is pushing up, and right here at this point price did not change the market structure, so I will risk right here like 50% of my of you know I will risk my 50%. So all right. Okay. Yeah, looks like quiet day today, guys. We have no news, so let's see what we have for the next week. So from Monday to Friday. So on Monday, all right. So Tuesday we have yeah, we have news on Tuesday. We have news on Wednesday. We have news on the Thursday, and we have some news on Friday. So guys, next week will be volatile. Next week, hopefully, we can get some trades going, because next week we have a lot of news, so the markets will be hot. So I think that we may see we may see some trades next week for sure. It's just ranging today, saving my bullets for next week. Then I love you. I love you. I love how you see price action and market. Thank you very much. Can you explain what do you mean by buy below the previous candle close and sell above the pre? No, 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 no. I mean by, for example, 9 a.m. candle, right? Right here you have the 9 a.m. candle open on the 4-hour time frame. So you will mark up in previous like so yeah. So uh, as you can see that right here in this candle, this is the 9 a.m. open candle, right? And when you just take the, just a simple tool, place it on the open of the candle, and this is the 9 a.m. open, right? Now, whenever you want to take sells or whenever you want to take buys, you want to take, for example, sells in the, above the candle open, because what price does whenever price, goes above the candle open, it does the wick, wick for the candle. So that means that whenever you entering above the candle open, that means that you're entering at the wick, and at that point you're looking at the, you're selling from the high, right? Or in a very close proximity. Now if there would be like cells, PD array for cells, like for example bearish order blocks to look for cells at the 9 a.m. open at this level, then you can take cells, right? Now whenever price opens and pushes down first, then you're looking for price to buy back. Why? Because prices on the 4-hour most likely will do the bottom wick, right? So whenever price pushing down below the 9 a.m. open, or any open, right? Any candle open, price is pushing down. That means you're buying below the candle open whenever price does creating the wick to the downside or to the upside. So whenever so the best trades will come above the candle open and below the candle open for buys, and for sells above the candle open or in a very close proximity if you have the bullish PD array or bearish PD array at the candle open. So that's how you do it. For example, I can show you right here, right? So right here you have the for example, I give you like good example. uh, all right, so for example, let's take this candle. So this was the candle open right here at or for example right here. Now you have the CRT, right? So you have the CRT right here. So you have this candle as the CRT, this bearish candle, and right here price does sweep the lows. Now this is the candle open. So we go to the 5 minutes. We go to the 5 minutes right here, and as you can see that price right here is pushing to the downside. So where do you want to look for buys? So obviously below the candle. So most likely the best buys right here was right here. You had the, inversion fair value gap. So as you can see that you're buying below the candle open because your candle open is here and you're buying right below the candle open. So this is what I mean. Because whenever you buy below or above the candle, that means you're entering at the wick of the candle. Okay. Yeah, yeah, of course, backtest it. Like whenever I say, you just backtest it, and you will see that uh, you are most likely to buy above the candle open or sell, sell above the candle open or buy below the candle open. That is what's happening most of the times. Because that just makes sense, right? Are we still waiting for the buys? No, no, I'm not waiting for the buys. Because the buys is from entering at the week usually comes as early catch of the trade, isn't it? Yeah, entering on the week is like the first entry. Like you have multiple tries to enter the trade. Okay, so for example, this is the candle. Okay, so just imagine this is the candle, and the candle has a wick. So for example, now the new candle opened, right? So new candle opened, pushed to the upside right here. Price is pushing up, making the wick. So at this level, you will see that you most likely will have a first entry as the order block from here at the top of the wick. So most of the times the order block will come at the top of the wick. Now price will push down, make make the first expansion to the downside. Now you have the second entry as the fair value gap most likely, or like if you take the fib and you buy the 62%, and so this is the two entries. This is the two entries you can find, that is the going to be at the top of the week, and then right here price will most likely to continue pushing down. So most of the times, whenever price does sweep the highs of the, does sweep the liquidity and has the first move down, for example, so price is moving down, price is moving up. Now price created the swing. Price did sweep this liquidity here, and right here you will have the first entry as the order block right here. This will be your first entry, okay? Sometimes price will continue pushing down, but if price comes, this is your first entry, then price moves down. Now price did create another swing, right? So from here to here, price did create another swing, and most likely somewhere inside here above the 50% or at the 50%, you will you will see the fair value gap. So your second entry will come when price does touch the fair value gap, and then this will be your second entry for the trade, which would be somewhere here. So this is how you look for, so this is from this order block, that would be a high risk, high reward trade, where I will risk like 50% of the trade, and then price has its expansion to the downside. Now at the same time you can have the market structure shift or something like that, and then the price comes back into the second entry as the fair value gap, or that could be the same order block, you don't know. So this is the rough explanation of how you enter the trade, right? So that's pretty much it. If that makes sense, of course. Because yeah, I want to show you some examples maybe here. I don't know. Yeah, right here is a very good example. For example, look at this. So let's take the daily range, okay? Let's take the daily range. So this is the CRT candle, right? So this is the thick candle bearish at the key level when price is with the sell side liquidity, and also touched into the fair value gap right here. So now this is the key level. Now price created the range, and look, you go on the 1 hour time frame right here. This is your first entry, order block model 1, because this is the candle that did sweep the sell side liquidity. So the first entry is obviously you enter from here, right? Your first entry you enter from here, and you targeting the highs. Now the second entry is obviously, you can see that price did push to the upside, came down below the 50% into what? obviously into the fair value gap, which is right here. This is the fair value gap on the 1 hour time frame. So this would be your second entry with the stop loss, down here and targeting the highs. So this is how you approach the market with entries, right? So first entry is model 1, which is order block. From here you can enter that, and the second entry would come from this point at the fair value gap, and then price just continues to the upside. Yep, that's pretty much it. That's so answering your question, comes early catch of the trade, then yeah, that would be a very you're basically catching the top, and you don't need to do that. You can just wait for price to displace first, because as I said right here, for example, right, price is pushing up, price creating the structure, and now price obviously can come down and then push from here without sweeping the or changing the market structure, right? But you have to wait for that, and that would be your the second entry. But whenever you have the displacement, right, then you have your second entry, which is very high probability trade, very high probability trade, right? We trade, right? Maybe, but I have to see what at what time price does that. Okay, if price does in the next, so if the next 15-minute candle closes below, then most likely, yeah, we can look. I can look for something to the downside. But again, this is very messy price action, guys. As I said, right here, from this level to this level, you have a range, which is, price can sweep the low, price can sweep the high, but this is the range. So until price, closes below or, does something else, then I'm not touching it. Very high probability trade. Well, whenever you have the very high probability trade is whenever you have the structure going to the upside, right? Now you have displacement down, and right here, right at this point, right here. So right here will be your high probability trade from here. So this is your high probability. This is your high probability trade, and right here is your high risk trade. Right here from this level. So this is number one trade. This is number two trade, and this number two trade is a high probability. When number one trade is a high risk trade, right? High risk, high reward. So, but very important that you wait for price to be at a key level, because when does this because when does this order block works? For example, price, right here, why you don't wait for market structure shift is because price is at a key level from the higher time frame. Okay, price did touch the key level from the higher time frame, and that's why this first entry from the order block will work for you, right? And and then obviously you take the trade, price does the displacement, most likely it will do the market structure shift, and then obviously your second entry is the high probability. So this is how there is break of structure. Yeah, whenever there is a break, market structure shift. So what is the market structure shift? Is either price is going up. This is the market structure shift right here, right? And price continues down. Or, for example, price goes up, creates the range, makes the high, comes lower, tries to go to the same high, maybe sweeps the liquidity, or doesn't sweep the liquidity, just comes to this to the close proximity of the high, and then right here you will have your market structure shift right here. You don't need to wait for this. Okay, you don't need to wait for this. Right here, you will have the market structure shift, and obviously from there you can look for trade. Most of the times I just don't take second entry because I have the good entry from the high and I just hold it. Um, and yeah, so that's most of the times. Yep. All right, so price is still in the range, pushing down, pushing up. Yeah, but we still respect this fair value gap. Yeah, yeah. If I will miss the first entry, then I will go for the second after the displacement. No problem. Yeah, because when here is still like not that many people watching, so you can ask questions, and if any day there will be more people, then it's kind of hard to answer the questions, right? But whenever there is no people yet, and yeah, you can ask questions, and I can answer them easily. So Yes, you're right. You're right. There are not many people who are as helpful and supportive as you. Thank you very much. Thank you very much for your kind words. Don't forget that's when you become famous. No, fame is not. It's not about fame. It's more about helping. Fame is For me, I would rather be rich and not famous rather than rich and famous, right? Whenever you're rich and famous, that's not really good. Unless you're like promoting something, right? You wanna be famous in a good way, right? You don't wanna be famous in a like bad way. Um, if that makes sense, right? You wanna be famous in the good way. So all right. So let's see how this candle closes. Uh, that was a kind of nice because price were respecting this fair value gap. As you can see, price did not go lower than the 50%. It just respected the 50% nicely. So more people knowing you within the industry, famous. Yeah. So you was asking me about the candle open. As you can see, the 9 a.m. candle open was here. So the buys came from where? Obviously below the candle open. So all right, guys. So it's 10 minutes left until my session finishes, and I don't think that I will get anything to the of my liking to take the trade. Price is in the range. Obviously, price can continue pushing up, and from here you can see something to the downside. But I think the sales will come next week. So, yep, that was pretty much it from me today, and thank you very much, guys, for watching, and see you on Monday on the next stream. So I hope you found this insightful, and yeah, thank you for watching. Yep, see you. Bye.